In times of economic uncertainty and rising inflation rates, many investors turn to gold and silver as a safe haven for their wealth. These precious metals have long been seen as a hedge against inflation, preserving the value of wealth when traditional investments like stocks and bonds may falter. Let's explore why investing in gold and silver can serve as a valuable protection mechanism against inflation and how individuals can incorporate these assets into their investment portfolios. Historically, both gold and silver have proven to be effective stores of value during periods of high inflation. As the purchasing power of fiat currencies like the US dollar declines, the value of gold and silver tends to rise. This is because these precious metals have intrinsic value and are not subject to the same economic forces that can debase paper currencies. For example, during the 1970s, a decade plagued by high inflation rates, the price of gold surged from around $35 per ounce to over $800 per ounce. Similarly, in the aftermath of the 2008 financial crisis, gold prices reached record highs as investors sought safety from the volatile stock market and inflation fears. According to experts, gold and silver prices tend to move inversely to inflation rates. As inflation rises, the demand for these precious metals typically increases as investors seek out assets that can retain their value. This relationship has been observed time and again throughout history, making gold and silver a popular choice for investors looking to hedge against inflationary pressures. While gold and silver can be effective hedges against inflation, it's important to consider the pros and cons of using these precious metals in your investment portfolio. One of the main advantages of gold and silver is their tangible nature. You can physically hold these assets in your possession, providing a sense of security during uncertain times. Additionally, these metals have a long track record of preserving wealth and maintaining their value over the long term. However, there are also drawbacks to investing in gold and silver. The prices of these metals can be volatile, and they may not always move in line with inflation rates. Additionally, storing physical gold and silver can come with added costs and security concerns. Investors should carefully weigh these factors when considering adding precious metals to their portfolios. For individuals looking to incorporate gold and silver into their investment strategy, there are several practical tips to consider. One option is to invest in gold and silver bullion or coins, which can be easily bought and stored. Another option is to invest in exchange-traded funds, ETFs, that track the price of these precious metals. Additionally, some financial advisors recommend diversifying your portfolio with a mix of assets, including gold and silver, to mitigate risk and protect against inflation. In conclusion, investing in gold and silver can serve as a valuable hedge against inflation for individuals looking to protect their wealth during uncertain economic times. By understanding the historical relationship between precious metals and inflation, weighing the pros and cons of these assets, and incorporating practical tips into their investment strategy, investors can effectively safeguard their portfolios against inflationary pressures. As you think about your savings and how the value of it decays every month because of inflation, you may wonder how best to preserve the value of your savings. Many people choose to buy a little gold or silver every month. You can do this easily at the same place I use. Just click the link in the description to check out this source. You'll sleep better at night knowing you took action.